These are 7 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you our review on LZMH. Technology Holdings Ltd, a company involved in information technology and advertising, has seen its stock shoot up by 30% today, even though there's no major news to explain the surge. The company operates 3 main businesses: smart community systems providing safety and access control, out-of-home advertising that offers multi-channel advertising solutions, and local life services that connect businesses to consumers through online promotions. So, what's behind this sudden rise? While there's no clear catalyst, it could be investors reacting to the growing interest in smart community technology and digital advertising. As more communities look for intelligent access systems and businesses seek innovative ways to advertise, LZ Technology is in a good position to capitalize on these trends. Their ability to bridge local businesses and consumers could also be attracting attention as online shopping and services continue to boom. Even without any specific news, this 30% jump signals that investors are starting to see the potential here. It's a company with diverse offerings that tap into a number of fast-growing markets, and this kind of stock movement might indicate that people are starting to see long-term value in their business model. Keep an eye on this one. There could be more to come. Our review on WOR. Our Loop Incorporated, an online retailer that operates through major e-commerce platforms like Amazon, Walmart, and its own site, has experienced a 26% surge in its stock today, with the positive momentum spilling over into after-hours trading. The company buys products in bulk directly from manufacturers at wholesale prices, then resells them on these platforms, with Amazon handling the fulfillment. Their product range includes everything from home and garden decor to toys, kitchenware, apparel, and electronics. So, what's behind this stock movement? While the exact news isn't clear, it's likely tied to the company's robust operational strategy and the continued boom in online retail. Our Loop leverages advanced software that helps keep products in stock and track everything from inventory to order management and shipments. This focus on operational efficiency allows them to stay competitive in a fast-paced, high-volume market. Additionally, the company's strong partnerships with Amazon and Walmart, 2 of the biggest e-commerce players in the world, set it up for success. By paying fees to sell on these platforms, Our Loop taps into massive consumer bases while managing to maintain healthy margins. It's a business model that capitalizes on the growing demand for online shopping, and today's 26% jump is a clear reflection of investor optimism. With this kind of momentum heading into after hours, it's clear that investors are excited about the company's potential. Our Loop's focus on leveraging technology, its strong marketplace presence, and its ability to keep products in demand are all factors that could continue driving the stock higher. If the trend continues, this could be one to watch closely in the coming weeks. Our review on WOR. Worthington Enterprises Inc. has been riding a wave of positive momentum lately, with shares jumping 23% today after reporting strong Q3 earnings. The company, which designs and manufactures a range of products from building materials to consumer goods like propane cylinders and outdoor living solutions, posted adjusted earnings per share of 91 cents, significantly beating analysts' expectations of 70 cents. Revenue for the quarter came in at $304.5 million, ahead of consensus estimates, which had pegged it closer to $289 million. While that's a win, the company did note a slight year-over-year dip in sales, primarily due to the deconsolidation of its former Sustainable Energy Solutions segment. However, this was offset by growth in other areas like their Ragasco business. On the cash side, the company is holding steady, with free cash flow hitting $44.4 million, up from $41 million last year. They also repurchased around 150,000 shares for $6.2 million, showing confidence in their stock and future prospects. Worthington CEO Joe Hayek seems optimistic about the long-term outlook, mentioning their strong balance sheet, free cash flow, and ability to invest in growth or pursue strategic acquisitions. Despite some short-term uncertainty due to tariffs, the company feels well-positioned for future success, thanks to its strong domestic presence and market-leading brands. The stock's impressive 18% breakout at market open today and the continued rise suggests investors are feeling bullish about the company's ability to weather current challenges and deliver value moving forward. Definitely a stock to keep an eye on as it capitalizes on its strengths. Our review on ALMS. Alumis Inc, a clinical stage biopharmaceutical company, has seen some exciting movement recently, with its stock up 23% today and even a 40% breakout at midday. The company, which focuses on developing TYK2 inhibitors for immune-mediated diseases, just entered a major collaboration and licensing deal with Kaken Pharmaceutical, a Japanese pharmaceutical company. This deal is centered around their next-gen TYK2 inhibitor, ESK-001, for dermatology indications in Japan, with the potential to expand into other areas like rheumatology and gastrointestinal diseases. The partnership is a significant financial boost for Alumis, with the company set to receive $40 million in upfront and near-term co-development payments through 2026. Plus, there's potential for up to $140 million in additional milestone payments. Alumis also stands to receive royalties on sales in Japan, which could range from low double digits up to the 20s. Meanwhile, Kaken will handle clinical development, regulatory approvals, and commercialization in Japan, while Alumis retains the rights to ESK-001 in other regions. This strategic deal really strengthens Alumis' financial position, extending its runway and freeing up resources to focus on other aspects of clinical development and regulatory execution. Analysts have also reacted positively, with H.C. Wainwright giving the stock a buy rating and projecting a price target of $15 per share, while Leerink Partners has set a target of $29. With such a strong partnership, a solid cash infusion, and encouraging milestones on the horizon, it's no wonder investors are feeling bullish about Alumis. This deal sets the company up for future success, and the stock's performance today reflects that growing confidence. Definitely one to keep an eye on as it continues its journey through clinical trials and potential commercialization. Our review on THTX. Theratechnologies Inc, a Canadian clinical-stage biopharmaceutical company, has been catching a lot of attention today, with its stock up 20% following some pretty big news. The FDA has just expanded the label for their best-selling product, Agrifta, which is a treatment for excess abdominal fat in people living with HIV. This expanded approval is a significant win for the company, and it's clear that investors are reacting positively, especially since shares surged by 30% in pre-market trading, even though they did ease back a bit later in the day. For those who aren't familiar, Agrifta is a treatment that helps manage lipodystrophy, a condition where fat is redistributed in HIV patients. The label expansion is huge because it broadens the product's potential, opening doors for treating a wider group of patients who are struggling with abdominal fat, a common issue for people living with HIV. For Theratechnologies, this is a real opportunity to boost its market share and increase revenue, especially with the growing focus on healthcare treatments that specifically target these niche needs. While the positive price movement is exciting, the story isn't entirely clear-cut. Analysts are a bit mixed on the stock's potential. There's a moderate by consensus on Theratechnologies, but not all analysts are convinced. For example, Justin Walsh from Jones Trading, who follows healthcare stocks, kept a hold rating, reflecting a more cautious outlook. His track record isn't exactly glowing, with an average return of minus 2.6%. So it's worth considering whether his perspective might be a bit more conservative compared to the overall market's bullish reaction today. But even with some hesitation from certain analysts, today's stock movement speaks volumes. The initial surge in pre-market trading shows that investors are pretty optimistic about the FDA's decision. As the day went on, the excitement cooled down a bit, which is often the case after an initial pop, but the company's position in the HIV market is now stronger, and the potential for future growth is looking better. What's really interesting here is how this label expansion could drive future growth. The company is already in a solid position with Agrifta, but this expanded approval opens up a new chapter, and for a company in the clinical stage, that's a big deal. The momentum from today shows that people are paying attention, and if Theratechnologies can continue to deliver on its pipeline and keep growing its market share, this could be a stock worth watching closely in the months ahead. As always, though, with some mixed analyst opinions and a history of ups and downs, it's important for investors to stay informed and consider the risks before diving in. Our review on EPSM, Epsium Enterprise Ltd, a holding company based in the British Virgin Islands, just made its debut on the Nasdaq today under the ticker symbol EPSM. The company's IPO price ranged between $4 and $5 per share, and it's already seeing some strong movement, with shares up 20% on the first day. Epsium primarily operates through its Macau-based subsidiary, LZMH, which specializes in importing and wholesaling a variety of alcoholic beverages, including Chinese liquor, French cognac, Scottish whiskey, fine wine, champagne, and other beverages. The 20% surge in its debut is a promising sign of investor interest, suggesting optimism around the company's growth prospects. As a relatively new player in the market, it's still early to tell whether Epsium can sustain this momentum, especially given the competitive landscape in the alcoholic beverage industry. What investors will be keeping a close eye on is how Epsium executes its strategies moving forward and whether it can carve out a strong niche in the global beverage market. With a 180-day insider lockup period, the stock could experience some volatility in the near term. So it'll be interesting to see how it performs as more shares become available down the road. For now, the market's reaction suggests that investors are cautiously optimistic about Epsium's future. Our review on PLTK, Playtika Holding Corporation, a major player in mobile gaming, is having a pretty exciting day on the stock market. The company's shares jumped over 20% after receiving a double upgrade from Bank of America, which moved Playtika's rating from underperformed straight to buy. Analyst Omar Dasuki, with a solid track record, raised the price target from $6 to $6.50, suggesting a potential upside of nearly 48%. So, what's fueling this jump? Well, Playtika has some heavy-hitting intellectual property, especially with popular games like Caesar's Slots and Bingo Blitz, plus some of the longest-running franchises in mobile gaming. While mobile gaming might seem like it's slowing down, Dasuki notes the market is still growing, and with Playtika's strong reputation, the downside risk is relatively limited. Adding to the good news, Playtika is about to make a major move, planning to invest $450 million in mergers and acquisitions over the next few years. They're also lining up 3 new game releases, including Disney Solitaire, Claire's Chronicles, and an unnamed slot machine game. This is especially significant because just 2 years ago, Playtika said it wasn't releasing new games until market conditions improved. So the fact that they're rolling out new titles suggests that the timing is right. It's been a wild ride for Playtika today, with a big surge in stock price. Investors seem to be buying into the idea that Playtika is set for some growth, both through strategic acquisitions and the promise of fresh content in a still competitive mobile gaming space. Please subscribe, give the video a like, and watch more from our playlist. Thanks!